Hey everybody, hey, this is me, Darius Anucauskas from Markets.com, and today is Friday. So what you're watching right now is a little preview for the webinar, which is going to happen in a few moments, so do not tune out. Hopefully you'll enjoy the session. We had a busy week, I would say, and it was full of interest rate decisions from various central banks. So we'll look into all that. We'll wrap up the week, so hopefully you'll enjoy the session. Yep, and I'll see you in a bit. All right, okay, ladies and gentlemen, hello, and good morning. Today is Friday, yes, the 21st of March, 2025. I hope you're all feeling nice and, well, as I said, not refreshed probably, but, ready to hit that weekend. Look, ladies and gentlemen, we had a busy week, as I already said in my preview. We had quite a busy week because we had like a lot of central banks delivering their interest rates. But look, before we jump into all that action, let me have a quick read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Now, also just a quick good morning in the chat room. Good morning. Where's that? Good morning, everyone. As always, I hope you're all feeling, like I said, feeling ready to hit that weekend. Let me just adjust my microphone here a little bit. There we go. There we go. If you're wondering what that little thing on the bottom there is, that's my microphone. I decided this time to try something else and not to clip it to my body here, but hopefully you can hear me and see me well. Also, just before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, Right, ladies and gentlemen, let's have a look at what's happening here with Nikkei. Now, Nikkei had a relatively modest week, I would say. Look, this is this week's candle, right? I mean, look at this. It's stuck here. I mean, the most important, it remained above that 37,270 zone. I talked about it. That's the lower side of the range where where we are, where we were before. There we go. Currently we're just kind of sitting slightly below that 50-day EMA, which is shown here as the green line, and that's on the weekly chart here. So look, we had the where's that BOJ? We had the BOJ interest rate decision coming up, saying that they kept the rate unchanged, so it's all kind of as expected in a way, nothing major. Just a second, let me just put these just to not disturb. Oh, sorry about that. Look, what can I say? We had, like I said, we had the BOJ delivering its interest rate decision, and and even though the bank is kind of still willing to go for hikes, it's everything at the moment, it seems like, against that. Everything is against the bank going for hikes. Why? Look, first of all, okay, inflation started dropping. Look at the numbers delivered on Friday today. Inflation, the official inflation number, a year-on-year figure, 3.7. The forecast was for 4.2. Although it doesn't say here, I was just looking at the other sources, and the forecast was sitting at 4.2. So we were expecting a higher inflation number, and then instead, boom, there we go. It came out on the lower side, and that's, like I said, that's a little bit of a bummer for the BOJ. The core inflation number also, I mean, okay, the core inflation was expected to come out on the lower side, but it came out a little bit higher than the forecast, and there we go, 3%. The previous one was at 3.2. Yes, it came out higher than the forecast, but hey, maybe the forecast was a little bit on the lower side. So 3%, I mean, yeah, that's a little bit of a slowdown here. And like I said, yes, in a way, looking at this picture here, We saw some positivity, but then started correcting back down. I think the market is worried still about future implications of of the tariffs, and I think that the fact that the BOJ said that they're going to keep the rates for like this right now because they want to see what's going to happen with all the tariffs, what's going to happen with the tariff situation, because again there maybe Japan will be hit with some big tariffs as well. So everybody's under the radar right now, and I think that the central banks are trying to keep it cool, trying to not to spook the market too much. We saw the Fed was trying to do that job, not to spook the market. But hey, for now, like I said, looking at this picture, what can I say? I mean, we remained below this downside line. So on one hand, still the downtrend remains, valid, because maybe this downside line is something to be watched, and if it continues to hold, another decline here could be possible. But for that decline to happen, or for me to get comfortable with the downside, I would prefer to see a drop somewhere back below that 37,269.70 zone here, and then we'll go from there. And then, yes, we could aim for that 35,970 zone, or maybe even below that. So in general, the 36,000 zone, that's what we could be aiming for. But if we clear that one, yep, it is opening the door to some lower levels. Nevertheless, look, I mean, in general, I am not that negative. No, I'm actually somewhat on the positive side. But again, a lot of ifs still have to happen for me, because a break of this downside line has to happen, a break of the EMAs here on my daily chart have to happen. So yeah, I mean, I'm waiting for all that. Let's jump into China 50. So the positivity faded away a little bit. So look, basically, I think that from what I'm seeing, from what I'm seeing in the articles everywhere, it seems like this China stimulus rally is like kind of unwinding, and that these are the headings that we're seeing. It seems like everybody's talking about the Chinese, kind of tech stock profit taking. So yeah, and that's what we're seeing here. So I've in my previous videos a while ago, and I don't know if I have some viewers who have watched my videos before, and when we had the this big jump here back in October or September, at the end of September, we had this big jump, big rally. Also, it came out with the words that, hey, China is like really looking forward to, like supporting the economy, and the government is supporting the economy. We got like there, I can't exactly remember already, like what was the rhetoric in there, but it's always the case. So they throw out these little, punch phrases, like like they're ready to do this, do that. The market reacts positively, but then everybody's kind of still waiting for like a follow up. Like so what are you gonna do? Like what exactly are you gonna do? And like and where's the actual action? And then we don't see anything of that, and then the market kind of right, okay, it was a trick. I got tricked, and there we go. We retrace back down. So what I'm saying is that I think the moment market right now is, maybe not everybody was ready to jump in straight away into positive action. Yes, everybody enjoyed the moment of the rally, but now the question is, can the government come out with some sort of like again additional support, saying, look guys, I mean, no, we're gonna do this, we're gonna do that, and and this is where the excitement could come in, and this is where the market could enjoy the the rally again. So that's why I'm not really giving up on the upside scenario. Looking at the technical picture here in China, we're seeing here the nice correction back down. I have to say that this is a correction before another possible leg of buying, because while we remain above this short-term upside line taken from the low the 5th of February, then yes, there is still a good chance for this one to drift higher. On a downside here, would prefer to see a drop below the 13,150 zone here. If we can get a nice drop below that, great, more sellers here could join in. And if we do fall below the 100-day EMA here, yes, I'm gonna go towards that 200-day EMA, which here on the daily chart, as you can see, has been acting as a good area of support. We had the PBoC this week as well. Where's that? Thursday. the PBoC came out with their 1 year and 5 year loan prime rate decisions, and look, I have to be honest, I was kind of hoping to see maybe a cut, but and this is what probably the market was also hoping to see, because look, they said that, this is where the rally started. Like everybody's, getting hyped and getting excited that the government saying that, oh, we might even see some rate cuts, and everybody's like, hell yeah, let's go and let's go get those rate cuts to support the battered economy, and also the fact that the housing market is struggling, and those rate cuts could have been actually spot on. Maybe that's what it could have helped. What could have helped for the stock market, the China 50 index to continue pushing higher, but. No, we didn't get anything of that. And kind of that's it. So it's like it seems like maybe they were thinking that just by mentioning it would have been enough, but I think that still the PBoC and maybe it's not the Fed, right? I mean, I'm not saying that the Fed is like the most awesome. No, it's just the most watched, but and it is most watched and it's most tracked. So in general, for the Fed to say whenever they come out saying, oh, we're doing this, we're expecting that, so we're really willing to go for those rate cuts and everything like that, and then without even doing anything, they can actually manipulate the market this way. But look, the PBoC is not there yet. I mean, in a way, and that's why in my opinion, they should have cut. They should have cut the rate in order to kind of help, push this index further down. And now what we're seeing here, we're seeing just kind of a total wipeout of all the gains kind of, made. So look at this. Look at this weekly chart. This is a move last week, and this is a move this week. So, we're back to kind of square one. Long story short, I think that the market kind of understood that, and everybody started taking profits. So back to kind of the idea of trying to see what's going to happen now with the upside line from the technical perspective. We can, rebound from there. Okay, that's fine. I'll consider a move back up. But if we start falling below the 100-day EMA, I'm leaning towards the downside. Dow Jones Industrial Average, so the U.S., what we're looking at here. In the U.S., we got a nice good kind of hold up here near the, near the 200-day EMA. So that's on the Dow Jones Industrial Average. I talked about it, and that's why I had my upside scenario on a break of this 200-day EMA. If we can get that nice clearance, that's when I would go for a larger correction to the upside. But did we get that clearance? No. So the positivity came in on Friday. We pushed higher. Yes, the Fed was all, yes, we're willing to go for cuts and everything like that. And, but I think that what they're willing to go for is only 2 cuts now. But let's have a look what's happening here with the updated with the updated FedWatch tool. So the May one, the May event is expected to keep the rates the same as we can see here. Yep, but by the end of this year, at the moment, the FedWatch tool is kind of pricing in 3 cuts. Right, okay, so I think that, as I said before, this will change because this week we had only 2 cuts before the meeting. Last week we had 3 cuts, kind of the projections for those cuts. So in a way, these 2 columns will change. Don't be following them too much right now. I mean, or not, you can follow them, but don't put too much emphasis on it, because those will continue changing. Because what I'm interested actually in is the June meeting, because during the June meeting we're expecting to see a cut, and the question is, are they going to actually go with that? If that's going to happen, okay, great. Maybe we could see maybe some action to the downside still if we're not expecting anything in May. And the May meeting is on the 7th, so look, you know that phrase, sell in May, go away, right? But I think that that has been shifting for a while now, and this is last year. I think it wasn't the case. Let me just double check by month. Let me do this is a monthly chart, so let's have a look. So last year, June, there we go. May was a good month. April was crap. So now we can see like that. Let's say this month, March is bad. Maybe in April we'll get a nice rebound actually. Why? Because maybe actually this year the May sell in May go away could be the game plan. Because look, this is the monthly chart, right? And this candle here is the March candle. Look at this. I mean, if we somehow manage to remain above that 41,700 zone, which on my chart here is the lower side of the range, now that would be wonderful. Maybe going into April, we could see a little bit of a retracement, maybe back to that 43,000 somewhere here. And then if let's say in May, you know, we see the rate and there's no cut, then, and of course we'll have some tariff wars and stuff in place. So then this is where, like I said, this is where we could see maybe a drift back down, and this is where the Fed will have to step in June and do actually the that rate cut, and this way potentially bringing the stock market back up. But look, at the moment we are ranging, I would say, on the monthly chart. So look guys, if you don't look at monthlies or weeklies, honestly, I really strongly tell you to do so. I mean, honestly, because you get yourself a bigger picture. Yes, when you're trading, you can have a look at those 1 hour, 15-minute, 5-minute charts. That's fine, but to understand the bigger, the broader picture, believe me, daily, weekly, and monthly charts are the way to go. So long story short, for now, look, yes, we're seeing a retracement, but if we somehow stay above that 41,700 zone by the end of this month, not week, month, that's where the interesting bit comes in. Then we can see, like I said, maybe April, going into April, we could see that breakout of this little short-term downside line. Who knows? But again, for now, we're watching this carefully. Today, in terms of economic events, today from the U.S., we don't really have much, to be honest. With the retail sales from Canada, they're going to be the important ones. Now going into next week, so next week is going to be a little bit more interesting in my opinion. We're going to get some composite numbers. Manufacturing and services PMI numbers. So house prices are coming out, new home sales are coming out from the US on Tuesday. Wednesday we're getting the durable goods, EI crude oil stock change, that's normal, the standard. Thursday we're gonna get the beloved no, it's not the PCE. What am I talking about? Honestly, I saw the core here, PC price. No, that's not the one. The GDP numbers are coming out from the US. Yep, together with the initial and continuous jobless claims. And of course, then we're gonna get from the US the where's that? Yeah, the Michigan. Right. Okay. Yes. So core PCE. There we go. On Friday, that's coming out. So PC numbers coming out on Friday. So keep your eyes on that. I think that could be quite an interesting moment here, especially we're going to be closing it's going to be the last Friday of the month. And look, I mean, of course, it's not going to be the last day of the month. The 31st is going to be Monday, but still, we could see some wrapping up on Friday. But again, let's not rush to live. First, let's deal with this Friday. And yep, for now, I think that what could happen here, we could be like on a bit of a up and down moment here. So I'm not going to be surprised if we remain. If we do slide, we can slide a little bit lower. That's fine. But if I think we might stay actually above that 41,700 zone. Let's see if the analysis will work out. S&P 500. This one's also looking a little bit more bearish, to be honest, because again, I talked about this. I said that look, we might see a retracement if the 200-day EMA holds, and it did so. Another decline here could be possible. Now I'm going to stick to that decline, but like I said, right now I think that maybe this arrow should be redrawn. because again, I want to see if the Dow is showing that, you know what, we're not really gonna go lower that much, then maybe the S&P and NASDAQ are going to follow the same suit. So that's why for the downside scenario, I'm going to take a conservative approach here, and I'll wait for a drop below the 5,500 zone in order to go get comfortable with the downside. The NASDAQ 100, similar story. For me to get comfortable with lower levels, a drop below the 19,100 zone would be needed, and because a forthcoming lower low then will be confirmed. The German DAX. Look at this, beautiful decline, and yeah, I mean, this is not working out well for Europe. We got some numbers from Europe. Was it Wednesday? Yeah, the CPI numbers. I mean, those, as I said to you on Wednesday, they're not going to be the most exciting numbers, because again, most of the time the European numbers are coming out like as forecasted, so it's kind of in a way like already priced in. So yeah, we came out at 2.6. Yep, the CPI here, sorry, the core inflation year on year came out at 2.6. The headline came out at 2.3, a little bit lower than the forecast, but hey, kind of in support of the ECB to continue with cutting rates. Yeah, so look, for now, what we're seeing here, I think that given that the talks around the Ukraine conflict and those have like somehow, I wouldn't say stalled, but yeah, I think that there's some sort of there's some sort of issues there, and I think that maybe it's like they're struggling to go ahead with a full ceasefire, but yeah, at the moment I think that this is what the market is reacting to. The German index is reacting to this, and hey, what I'm looking at here is we're breaking the upside line in a way that's opening the door to some lower levels. We're dropping below that 22,850 zone. If we somehow stay below that, I'm leaning towards the downside, to be honest. But again, I will be very careful with the downside because I have these levels here. Let me just minimize this one. Yep, I have these levels here. I have this these upside lines here that I want to keep an eye on, and yeah, I mean, I think that these are good ones. So for now, that's what I'm going to aim for. I'm going to aim for the downside, but again, you know what, I want to remain a little bit on the careful side because we had this decline. If you missed that decline, maybe this is on its way to create something like a double top pattern. Again, it's an idea, but I will kind of stick to that idea if we do see if we see the body of the daily candle remaining below this upside line. Now, jumping into the FTSE 100. So, look, BOJ, and that's Thursday. So the BOJ interest rate decision 4.5 as expected. So everything is in line. But what the thing has changed was that the BOC vote cut. So there was only now one member in favor of the cut, and basically 8 members are unchanged. So that's something that, yeah, previously there were like 9 members for a cut. Now there's like 1 only member for a cut and 8 are for unchanged. So basically everybody's saying that, hey, you know what, let's take a pause, let's see what's happening. So what can I say? For now it's the market is reacting accordingly. We're saying that yes, of course, the market does want to see further cuts because, again, comparing it to, let's say, the ECBs, which are like at 2.65, the UK's is at 4.5, so it's like almost like double, right? Okay, it's kind of in line with the US, fair enough. But still, U.S. is over the ocean. These guys, Europe is kind of over the Le Mans. So anyway, but of course, we don't look at these things from geographics perspective. So anyway, look, for now, what can I say? For now, we're seeing a little bit of a retracement. That's absolutely fine. Still nothing critical because, again, this could still have nice kind of hold up somewhere near this 8,610 zone. So if we do remain somewhere above that 8,610 zone, then hey, and we do remain above the 50-day EMA, then hey, I will consider another push higher. Let's jump into the Forex world, ladies and gentlemen. Let's have a look what's happening. AUD USD, there we go. So the US, by the way, I missed it, the US dollar, there we go. Honestly, like this, look at this. How could I miss the US dollar, honestly? So another US dollar index here. Look at this potential double top formation. Let's see, because this is what I talked about. This is what I said to you in the beginning of this week. For me to get comfortable with some higher levels, a push above this barrier here, the 103.75 is required. And if we do clear that area, then yes, wonderful. More buyers here could join in. And we could see a nice, move towards this downside line taken from the high of the highest point of February. Now, for the downside, I would like to see a drop below the 102.83 zone. If we can get a nice clearance of that one, this would confirm a forthcoming lower low, potentially attracting more sellers into the game. So that's why, let me just adjust my microphone a little bit here. Right, okay, sorry about that, ladies and gentlemen. So just wanted to make everything nice and tidy. So look, for now I would say yes, that's great. We're getting a nice hold up here near the 103.75, but if we can somehow push and stay above that hurdle, I'm leaning towards a larger correction to the upside. If not, if we're not gonna go and we're gonna, let's say, get a hold up below this area and then we will say drift back down, then I'm looking at this from a possible range perspective. So where we could be sitting in the box of some sort and waiting for our special day when we can clear one of the sides of that range. But at the moment we're near the upper side here. Let's see if we can clear it. If we cannot, I'm taking a bit of a neutral stand. Let's jump into AUD USD, and this leads me to this. So if we do get that pop in DXY, guess what? The AUD USD could continue drifting lower. Very simple. However, I believe that this upside line, it had its purpose initially. Now it doesn't have its purpose because it got cleared. So this is what I talked about. I said that if we do clear this upside line and we fall below the 50-day EMA, I'm going to lean a little bit lower, a little bit, not much, but I think that this this chart needs to be redrawn. So yeah, I'm gonna take this line and I'm going to reuse it because I think that now it has this other purpose here, and this is the upside line that I'm going to keep an eye on. So basically this here is something like this, or could be something like this. Now this upside line could have this purpose. Now we could see a rebound from this upside line. So if you're looking at some lower levels, I would say then yeah, wait for a break below this upside line, and then we could go towards the 0.6186 territory somewhere here, marked by the lowest point of March. AUDJPY, so far so good. This is working out. Like I talked about this before. I said like if we might see a retracement back up. We did that retracement. We tested that downside line. Boom, beautiful test. And yep, let's see now if we can actually drift back down. Can you see? If I make it smaller a little bit, can you? Yeah, you can still see it, so that's okay. Yeah, like I said, for now, I am loving the idea here. It's drifting back down. The market is kind of getting spooked a little bit, so, but it's not critical yet because I think that my preferred scenario for the downside will be from this break of the 91.85 zone, because just to be a little bit more on the safe side. NZD USD. So this one I like a lot. I really do. And initially I said to you that look, if we're going to stay above the 100-day EMA and this 0.5771 territory, I'm going to continue targeting the upside. So we could see a rebound here, but we fell below this, and this opened the door now towards some lower levels. So if we do stay below the 100-day EMA, my next target is the 50-day EMA, and then we'll go from there. That's what I'm going to do here for now. And hey, what can I say? what can I say? This is the game I'm going to play right now, and I'm going to lean a little bit more towards the downside, and even more to the downside if we do fall below the 50-day EMA. The RBA and the RBNZ are coming out in the beginning of April. So, I'll talk about that later. I'll talk about that next week. But for now, just we're observing the price action here on this one. And we're watching carefully the US dollar. Speaking of the US dollar, USDJPY. So look at this. We're back into this little kind of range here, or not really range, zone. That's more appropriate word for that, because it's kind of acting as a range sometimes, but we're getting those violations. But in general, look at this. I mean, so far it seems like it's the pair cannot kiss this one goodbye. Because it's loving this area, and well, to be honest, I love this area as well. And what I would prefer here is still to wait for a break of this downside line in order to go higher. Well, until I get that, I'm not really I'm not really getting comfortable with the upside. So I need to see that clearance of this downside line. Then of course I have a problem with the EMAs, which are kind of in the way. But if those get cleared, yep, higher levels could be met. For the downside, I'm taking a very conservative approach here, and I'm waiting for a drop below the 147.20 zone right there, and then we'll go from there. USD CAD. So of course USD CAD. So we have some Canadian numbers. Yep. We're having some Canadian numbers today, so retail sales and new housing numbers, so keep your eyes on those. Where's the month-on-month figure? Yep, retail sales month-on-month figure. We're expecting to see a huge decline. Now, if we do see something like that, then hey, don't be surprised for to see this pair maybe popping a little bit higher. Currently, we're resting on the 50-day EMA here, shown as the green line. But yeah, I mean, look, if somehow the number comes out better than, let's put it this way. Actually, if the number comes out, let's say above minus 0.4, and let's say it comes out in the positive territory, just stays in the positive territory, like above 0, then I would say that this could be something of a positive moment for the Canadian dollar if the US dollar is not moving. If it's like flat, for example, right? But if the number comes out, because what I'm saying is that I doubt that it's going to go back into 2.5 or above 2.5. Maybe it could be somewhere, like I said, below that, but if in positive territory. If it stays in positive territory, then yeah, I'm kind of we could see the Canadian dollar maybe strengthening a little bit, and we could see maybe a drift back down. So long story short, keep your eyes on that if you are trading USD CAD, USD CHF. I talked about this pair. I like this pair. The beginning of this week, I said, and I also threw out some analysis here on TradingView. You can always check out this one. Basically, this was on March 19th. I threw out this one. I said, if you don't have DXY, keep an eye on USD CHF, because in a way, it's kind of doing the same thing as DXY. I mean, look at this, right? It's similar, almost similar. So that's what I'm saying. For the downside for me, I need to see a drop below the 0.8757 territory. If we can get that move, wonderful. I will go lower. For the upside, yes, a break above this downside line, a break above the 0.8870 zone is required. Now, looking at the Euro USD, there we go. This barrier, the 1.0950, presented itself with a fantastic hold up here, and we failed to break above it, or and there we go. So we're staying below it. Am I getting very bearish right now? No, because I said to you previously that I'll get a little bit more bearish if we do drop below the 1.0220 zone right there, 22, something like that. If we can get that nice clearance, amazing. I'll go lower towards the 200-day EMA. EUROJPY. EUROJPY, we fell back below this area. So we fell back in between those two trend lines here. So I would say I'm gonna lean a little bit more maybe towards the downside, but only if we do fall below all my EMAs on the daily chart. If we somehow push back above the 162.35 zone, I'll consider a bit of a move to the upside. Euro Aussie, just a quick glance. What's happening here? It's a mess a little bit, to be honest. You know what? I want to get rid of everything. Yep, remove everything and start fresh. So in a way, this is kind of forming something of a bullish flag here, but it's somehow struggling. So you know what? At this point, I think that the downside scenario is quite interesting, but only from around here, from around this 1.7085 zone. For the upside, I would like to see maybe a push above this area somewhere. Oh, actually, you know what? No, I'm going to reiterate that. For the upside, I'm going to take a little bit of an aggressive approach here. And look at this barrier here played out nicely. This 1.72, yep, 1.720405. So if we somehow stay above the 1.7205 territory, and we see the body of the daily candle remaining above that territory, then maybe I'll consider, like I said, a little bit of an up move. So, just had to have a little bit of tea. Look, Euro NZD, similar story, but okay, and GBPUSD, now that's what I want to pick up on. Very close. We were very close to hitting that 1.3040, but I think the market said, you know what, I'm happy with the 1.30. So 1.3040 maybe was just, a little bit too much, so let's not be too greedy, right? The bulls said. But okay, that's fine. So look, we retraced back down. We're currently resting on that 61.8% here in the Fibonacci retracement. That's roughly around the 1.2923 zone on my chart. So if we do fall and stay below that, I'm gonna lean a little bit more towards the downside. So yeah, let's see how this is gonna play out, and then yeah, we'll take it from there. For the upside, I would prefer to wait to see what's gonna happen here, because look, for the upside, I think it could be a little bit easier if we do somehow push back above the 1.30 zone. I think that could open the door to some higher levels. Let's jump into the commodity world, ladies and gentlemen. Gold, look at this. Gold is declining a little bit. We fell back below this hurdle, back below the 3042 zone, which is at 50% on my Fibonacci retracement. Sorry, not retracement, Fibonacci extension. Now, what I do want to put here is the Fibonacci retracement. So, but look, okay, so this we can get rid of for now. I think that it did its job. I think it was good. Now I want to put the Fibonacci retracement. I'm not saying that this is something that, you should be thinking of as well, but something, tells me that, hey, I think we could now consider this, because we fell back below the 3045 zone. This was the area I was watching previously, but I think now now the main level is the 3057. That's the all-time high, which was reached yesterday, and now we're seeing a little bit of a retracement, which is fine as well. We fell below yesterday's low at one point today, which is around 3025, but if we can again fall below that hurdle, I think that this is where the interesting bit comes in, and we could target that 3004 zone, which is basically the 23.6 here on the Fibonacci retracement. So keep that in mind, ladies and gentlemen. Could be quite an interesting one. I'm not saying that from there we could go, we will go further south or something. No, but there is of course a chance if we do break that 23.6, if we can clear that. My next target is the 38.2, and then we'll go from there. Silver, slightly bigger decline, I would say, and there we go. I said to you before that if we do somehow stay above the 33.38 zone, wonderful, I will consider a move back up. Well, we fell back below this hurdle. However, I said to you my downside scenario is a break back below this downside line. And the reason why I'm saying this is that because previously I talked about these scenarios when, in this theory, when we do get the break of a trend line of some sort, we tend to revisit it from the other side, and this is where we're doing right now. It seems like that. So maybe this is going to go this way, and maybe this could go a little bit lower, test this downside line, fail, or maybe create something like false breakout or something, fail to stay below it, and then rebound and push back up. Again, idea. Oil Oil is seeing a nice rebound. There we go. So and that's coming in from the OPEC, some OPEC countries which decided to go for some production cuts. And this is what's dragging the price higher a little bit. So that's in a way great here for the bulls. And there we go. We're breaking this downside line at the moment, but we're struggling to remain above the 68.30 zones here. So if we can, would say, look, if we can kind of somehow remain below the 68.30 zone, maybe then yes, we could end up being in a range. But this downside line, I think it did its job. Now it's time for it to retire. So now I'm just keeping an eye on this whole box here, in this whole area right there. And hey, if that's the case, if we can remain inside this box, okay. For the range trader, I think that's kind of enough width, enough range. But for those who are waiting for breakouts or something like that, then I think you'll have to just kind of play the waiting game a little bit. Natural gas, we have increased. We saw some increases in U.S. stockpiles of natural gas, so that's the reason that we're seeing this decline. But in general, look, the 50-day EMA is providing good support. But if I want to go for some lower areas, then a drop below that 50-day EMA is required. Jumping into coffee very quickly. Let's have a look. Okay, this one's, this upside line as well, no longer needed. I think that now what I'm going to do here, if we do fall below the 50-day EMA, I'm going to lean towards the downside. That's it. Wherever it's going to be, if we do stay below the 50-day EMA, I'm leaning towards the downside a little bit. For the upside, 411 zone is still something that I'm watching carefully here. Very quickly on, let's have a look at what's happening with wheat. The downside, nothing major. Sugar is stuck. It's oscillating around this 100-day EMA here, shown as the blue line. But hey, if we're currently staying above it, and if we can clear that 1990 zone, or in general that $20 mark, then hey, this is opening the door to some higher levels. Cotton, one of my favorite ones here. We're seeing a nice little decline here. That's all fine. I talked about cotton recently, and I did throw out a piece here on cotton, so you can check it out. That was on the 19th of March. So yeah, I mean, let's see, let's see if this is going to work out to the upside or not. But again, there are a lot of ifs first, So at the moment I'm watching this 60 kind of 5 territories somewhere around here. I want to see if in general the price can hold above that 65 zone. If it can, if we see like a prolonged holding up moment above that area, then there is a chance for this one to kind of maybe fly back up, because hey, maybe we're going to be in the beginning of forming a higher low. Who knows? Let's jump into the crypto world, but I think that I'm not gonna spend too much time on the crypto world, to be honest. Bitcoin is the one that I'm watching right now. Yep, Bitcoin is kind of retracing a little bit. What's interesting for me on Bitcoin here is that the crypto here seems to be forming something of a rising wedge, and that's kind of where it's hitting my alarm bells, because rising wedges tend to break to the downside. If you don't know the theory, well, now you know. If you don't know, now you know. For now, like I said, I'm looking at this, like I said, maybe this is going to be the case, I don't know, but I keep on saying, while we remain inside the pattern, there is still a chance to go higher. However, the breakout most of the time tends to be to the downside. However, I've seen this happening in the opposite direction as well, so I'm not saying that this is for sure it's gonna break out lower, but it's just like I said, according to all the TA rules, this kind of tends to break to the downside. However, again, I have to stress this very, very carefully and say that wait for the clearance first and then do something, and then you can do something about it. I mean, always do something about it if you feel comfortable, because if you don't feel comfortable, then it's like, what's the point? I keep on saying, if not all your boxes are ticked, don't jump into the market. So yeah, ladies and gentlemen, look, I'm seeing here, one more crypto that I'm going to pick up here, and I'm going to pick up on the on the trading views chart here, Ripple, because this is the crypto that kind of took attention this week, and hey, hopefully we could see a bounce back up here, because again, we had this breakout, nice breakout here to the upside on Wednesday, because the CEO announced that there's going to be, like, that the SEC will be dropping its case. Look, I would say this way. For now, I'm looking at this this area right here, the 2.40 zone. If we somehow stay above it and we stay above the 50-day EMA, then I'm going to lean towards the upside. But at the moment, look, we're seeing a little bit of a drift lower. It's a little bit on the I'm a little bit on the careful side. I'm going to get a little bit more bearish if we do see a drop below the 100-day EMA, and then I'm going to aim for the 200-day EMA. At the moment, yes, we're seeing a little bit of a decline, but again, I'm not rushing into things yet. Maybe we're going to see some sort of like a bullish flag, hopefully, or maybe a bullish pennant or something like that. But again, let's see. Let's not rush into things. For now, I'm watching that. I'm watching that 50-day EMA very carefully, which is shown here as the green line. If we somehow jump back above it and stay above it, hey, there could be some positivity to come through. So, ladies and gentlemen, that's it. That's it for this session. I hope you found it useful, and I would like to say a massive thank you very much to all of you, who watched this session, who were watching, who was watching the other sessions on Monday, the week ahead, on Wednesday, the midweek review, and this one, yes, the weekly wrap up. So, look, just to let you know that on Monday, sorry, there's not going to be a show, but on Wednesday we'll resume in the morning. But hey, also on Wednesday I will hold the webinar, the live Zoom webinar in the evening, in the European evening, and basically, yep, you can sign up to that one. It's this one, in which you can see here on your screen, and the link is in the description of this webinar. Yep. So hey, like I said, I will adjust this. Actually, you know what? The link with the let me finalize the video, finish with the video editing of this webinar, and then once it's uploaded, so you will see the link in there. But yeah, hopefully you'll join in. I would like to, like I said, I will share some insights, and I will share some, my history, my story of trading, and and how it went, all good and bad as well. So, ladies and gentlemen, thank you very much. I'll see you next week on Wednesday, because like I said, Monday we're not going to have a show, so I'll see you next week on Wednesday. Have a beautiful weekend, and see you then. Bye-bye.